tax refunds. You think about the potential for tariff refunds that you get, combined with the events and activations this year, whether it's the World Cup, whether it's America 250, there's reasons for consumers to go out and spend if we can get some stability and certainty in the macro.
Well, listen, I just looked at tickets for the World Cup. Those things are pricey. All right, Dana, we'll leave our conversation there for today. That's Dana Telsey, CEO and Chief Research Officer at Telsey Advisory Group. Our thanks to Dana. Coming up, we'll take a look at the latest reading on inflation with the February CPI report just about to hit the wire. Morning movers. We'll be right back.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Welcome back to Morning Movers. I'm Diane King Hall coming to you live from the New York Stock Exchange. Time now for the economy check. For that, let's go right over to Tom White, co-host of Fast Market, with the latest inflation reading just hitting the tape seconds ago. All right, Tom, let's talk through this. This is the February reading. It matters to the degree that we don't want to see it hot. What are the details?
Yeah, basically in line, up 0.3% month over month, up 0.2% on the core month over month, and then in line as far as year-over-year numbers. Also, the headline up 2.4% and core up 2.5%. Those match what we saw in January, and it's kind of reflective that, hey, maybe we didn't have a lot of inflationary pressures in February as jobs were kind of weaker than expected. But at the same time, I think you can kind of maybe not throw it out, but at the same time look forward to the next reading that we're going to get for the March numbers, just due to the fact that we've seen this spike in crude oil. A lot of this uncertainty is coming into play. We've seen GDP estimates come down due to the conflict in the Middle East. So this is a good reprieve. We saw stocks bounce off of those session lows, but everything's basically in line. Seeing yields, that 10-year kind of consolidating. We're at 4.17% at this point. The dollar's firmed up around the 99 level at this point. So no real big movement in markets. I think it's still going to rely on crude oil at this point. We're up just over 4%. And I think that's going to be the driver for equity markets right now. That correlation between, higher oil prices and lower equity prices continues. And we saw that reversal yesterday with crude oil down 9%. That actually gave a little bit of boost to equities as they tried to be positive, but settled relatively flat on the day. But yeah, inline inflation numbers, that's the good part. The uncertainty comes into projections for next year as we await maybe some news out of the IEA. We're going to open up some potential oil reserves globally. We've already heard from Japan and Germany, who said that they're willing to open that up also. But then we're getting some negative commentary out of Iran, where they're not going to push back, or they're going to continue to push back on any crude oil going through the Straits of Hormuz.
Okay, yeah, I think you're right about, where the market attention will be on oil prices today. And, it feels like we're just on edge waiting for the latest headlines and determinations there. And I appreciate the caveat that you gave with regard to today's CPI reading. It does not take into account what we're seeing with high energy prices, crude oil prices, and how that feeds into gas prices. Now, I imagine core will also matter with the next reading because we'll then get to strip out that volatile component. Your thought, Tom?
Yeah, we're definitely going to see some volatile numbers next reading for March CPI, just due to the fact that what's happened over the first couple of weeks here in this month. Also, you start looking at some real hourly earnings up 1.4%. The previous was 1.2%, so that was a little bit higher. And year over year, up 1.7% versus 1.9% previous. So wages continue to be robust at this point. That's a nice caveat to have within some of these numbers. But at the same time, yeah, I just expect some volatility in numbers for the month of March, whether it's going to be inflationary data, whether it's going to be jobs data, just due to the conflict in the Middle East. But keep an eye on oil today, Diane. I think that's going to be the driver, and hopefully some commentary out of the administration and potentially the IEA to kind of drive equity markets, which are consolidating around the flat line here today.
One of the things that does stand out to me in this CPI report, shelter. It rose just 0.2% in February, and we know that's been a particularly sticky factor, and it's, the biggest factor in the all items increase. But it's down from January, where January we saw an increase of 0.3%. So I think that is one positive that stands out to me, Tom.
Yeah, and think about this. That's that lagging indicator as far as inflationary pressures go, right? Is the housing component within it. And that usually takes longer. Now we're starting to see some weakness in some of the numbers here, just due to the fact that we've seen consolidation on mortgage rates at this point, just above 6% at these levels. Now, we did see some activity as far as mortgage apps goes. It was up 11% last week, up less than that, but still positive this week. So that's a bonus. Now, we've always talked about that there's not enough supply to meet demand out there. But then again, there's not a lot of activity going on in the housing market right now. And maybe that shelter, if that continues to come down, maybe that can offset some of the other components that are starting to rise. And remember, inflationary pressures moving forward due to these this volatility in crude oil, it's not just, paying at the pump. It's every aspect within the corporate side and moving that on to the consumer also. What impact is that going to have? Is it going to make the consumer pull back a little bit? And maybe that lessens some of that higher inflationary impact that a lot of people are expecting going into the next readings.
All right, good stuff. Thank you, Tom. That is Tom White, co-host of Fast Market. You can catch us both later this afternoon at noon Eastern Time. Time now for a look at Tesla with Alex Coffey, co-host of Next Gen Investing. So we've got our eye on shares of Tesla after this Business Insider report regarding AI agents. It feels like everybody's getting into this. You had NVIDIA yesterday, a report about Nemo Claw. What's the latest here?
Yeah, so Tesla shares are a little changed this morning, Diane, but did erase earlier losses after parts of this story hit the tape. If you know XAI, which has been working on, kind of the tongue-in-cheek named macro hard AI agent, Business Insider reporting that project has stalled effectively given some leadership turnover at XAI, but that many of those resources have been diverted and shifted towards Tesla's AI agent, which has a different focus, that of course called Digital Optimus. The idea being just a different technical approach for these two products. The one from XAI, the macro hard, is a little bit more of a static image-based training that it had been focused on. This project from Tesla is going to be more similar to their approach to full self-driving. in the Tesla
Cool.
humanoid robot, which is emphasizing real-time
Today's,
continuous control.
Wednesday.
So
Already
not
middle
a
of the week.
huge
It's going
impact
by,
on
yo.
shares just yet, but you
Hope
can kind
you're
of see
up
the
bright and
AI
early and
work
bushy
becoming more
tailed. Let's finance
integrated,
with
more
Reezuhn.
vertical
Make money.
over at Tesla, not just tied
Make
simply
money. When we
to
make
robotics,
money,
not tied
we
simply
wanna
just to
keep
autonomous driving.
the money.
All right, thank you, Alex. That is Alex Coffey, co-host
Simple.
of Next Gen. Coming up, we'll
Easy
analyze
no.
the scope of the current market and ways of utilizing the
If you
concentrated
could find
value
it simpler.
strategy in your portfolio. That's next on
Show
Morning
it, love.
Movers.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400
It
technical
always
studies.
says we're not
Tailor the
subscribed,
platforms
but
to
we
your
are.
unique needs with
Want
nearly
people to know
endless
that we're not
customization.
mean like that.
And
We
track market trends with up-to-the-minute
follow our
news and
resources. Our
Trade
sources,
brilliantly
hopefully
with
they're our sources, hopefully they're resources.
Live from Chicago, this is Trading 360. I'm Marley Caden. We
Hi,
track
Marley.
macro forces, market trends, and company news that shape investor
Marley and
decisions,
me.
all with expert
Man,
analysis
I don't
and
wanna think
actionable
about that movie.
context. From inflation data to sector rotations, earnings to policy,
Wilson,
it's a
why'd you do
comprehensive
that?
view of the market every trading day. Trading 360, in-depth market coverage
And
straight
fucking
from Chicago.
Jennifer
Weekdays at
Aniston.
11 a.m.
Should make me
Eastern
cry.
on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area.
Before you were
He
born.
started with nothing. He worked hard, and after he passed away,
Wrong
the
stone.
torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to
Who's
Morning
up? Who's
Movers. I'm
up?
Diane King Hall, coming to you live from the floor of the New York Stock Exchange. We want to welcome in our next guest. That's Ari Sass, President and Senior Portfolio
We never
Manager
like to
at
say
MD
that we're
Sass. Ari, thank
better
you so
than
much for
other
joining us
people.
today.
But
we know
who's
you're
up?
launching a new ETF.
Who's up right now?
But before
Who's
we
watching
get
money?
into that, I want to get your big picture take about things,
I tuck
where things
money
stand.
in the
You know,
bed
there's been
and
a lot
I
of
wake
volatility
it
in
up.
markets recently, but to be fair, the S&P 500 is off by about 1% so far this year. Talk us through what you're paying attention to.
Sure. Well, as you said, there's clearly a lot of volatility in the market, and we expect that to continue given the geopolitical tensions. I would say that we actually like volatility. We think that creates opportunities longer term. So, we think that dislocations are and will continue to occur in the market. And that creates a really compelling longer term opportunity for select companies where you expect significant growth and earnings estimates above consensus. So we like these periods of uncertainty. We expect this to last some time. I think the reality is Trump is concerned about the midterm elections coming up. He's concerned about affordability for the consumer. So we are hopeful that this will subside and we'll see some de-escalation. And if not, I think we'll find some really exciting opportunities in the market through dislocation.
Yeah, because gas prices are certainly a pain point for consumers, Ari. But let's talk about where you see opportunities. What sectors, where do you see those opportunities?
Sure. We think what's really interesting right now is we think that this AI investment story is migrating from AI infrastructure to AI enablement. In other words, the market has really been led the last 3 years by companies that were instrumental in AI infrastructure building.
Collateralized
But
mortgage
like prior
mortgages,
tech cycles, oftentimes the real investment opportunities long term are made from service and software companies that sit on the backbone of technology innovation and really leverage it for new products and
market
offerings. And
price
so we think we're
minus,
entering this
like
period
market
now,
minus. I'm
going
not
from
thinking right
AI
now,
infrastructure
sure.
to
God
AI
damn it,
enabled
think.
companies. And a lot of those companies are
Call
physical,
intrinsic,
real world
market
type
minus
companies that
strike.
are really often in the value
But
sector
that's
of the
what it,
market, industrials, transports, financial services. We think we're really in the very early innings here of AI enablement leading to significant productivity enhancements, which will show through in the financials. And so to us,
it's gotta
that's
be
the most
obvious by
exciting
now.
theme that we're watching right now is this transition to AI enablement.
Two things come to mind. Yesterday, Jensen Huang, CEO of NVIDIA, which I know most people know, put out a blog post about AI and the layers that there are to it. He likened it to, I like the analogy, a 5-layer cake, talking about energy, chips, infrastructure,
Capital
models, and
appreciation.
applications. So that, that comes to mind
Mid-growth
as you're
cap.
talking through how you see AI opportunities and, companies with moats essentially, or sectors with moats within this AI disruptive era. Financials,
Treasury,
you
it's
mentioned
gotta be the
financials. Those
safest.
have been challenged this year. Last year you had a great year
Oh.
for financials. Do you think it's a
The
temporary blip in the
mid-cap
road?
growth fund is most appropriate. That's what it is.
Well, I think you have to be
Capital
selective. So we only own a portfolio of 20 to 25 stocks. So we're highly selective in any stock we own in any given
mid-sized
sector.
growth. God
But
damn it, Dalvin.
what we would say is there are certain companies within the financial
growth
services
stocks.
industry where
Income is bonds.
there's a
Gotcha.
heavy component of human labor for processing. And we think that AI works great to automate standard tasks that are, previously been handled by humans, right? So we do think there's this opportunity for AI to transform the workflow of financial service companies. Now, the critical thing is you have to find companies that can gain that productivity enhancement while preserving their own margin, right? And not just competing that value away. So we're selective. I mean, we own Intercontinental Exchange, ICE, for example, which is it's just not a bank. It's a financial service company where we think AI can transform the business in terms of their mortgage technology business, their exchange business. So yes, I think there are select opportunities within financial services amongst other value.
And let's talk about your first ETF that you all are launching. The ticker is SAS, S-A-S-S, not to be confused with software as a service. Talk us through, the impetus for this and what's in this wrapper.
Sure. There's a few reasons for it. Number one, I mentioned before that we think market breadth is widening and there's a transition from growth.
There we go. Uh-oh. Oh. I hate when it does that. It's all good. We're right back. It jumps around when
We believe strongly if you're going to be an active manager in the market and warrant the fees you collect, you need to be active and have high conviction ideas through a concentrated portfolio, and there aren't very many of those. So that's number two. And number three, we think that this is a really elegant vehicle for RIAs and financial advisors because it's more tax efficient than a separately managed account or model delivery type mechanism. So we think from a tax efficiency standpoint, this is also a really great solution.
Who doesn't like tax efficiency? Ari, any final thoughts you want to leave us with, whether it's about the ETF or your broad market thoughts?
Sure. Just the one last thing I'd like to point out, we are value investors, and I think there's a misperception about what that means. We're very different than most value managers in that we do not start idea generation with finding cheap stocks. We lead with having a fundamental view of a business that's materially different than consensus. And we think that that's really important. You can't just buy cheap stocks. You have to find situations where you're materially out of consensus and buy that at a reasonable valuation. So I think we bring a different approach to value investing, and we look forward to bringing that to the broader investor base with the active ETF.
All right, thank you, Ari. That's Ari Sass, President and Senior Portfolio Manager at MD SAS. Appreciate your time. You got it. Coming up, it's time for Options Corner. We'll chart and trade the software ETF IGV amid an easing of the software sell-off. Morning movers. We'll be back after this break.
Cool. Alrighty. Get back to this test. Gosh, I hate taking tests.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning,
More distractions.
whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights,
I gotta
live
drink my
support,
hot cocoa
powerful trading
first.
platforms, and
Gets my
400
head
branches,
right.
all at your service, all so you can invest your way. Sounds nice, right?
Everything sounds nice.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's
Tell me
market.
you're cynical without telling me you're cynical.
Consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
I don't know why that was.
Invest your way with Schwab.
I do need a nap. I'm
Moves,
tired.
earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Where is that accent from? He sounded like I'm all over the place.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back on Morning Movers. The software sector has dominated headlines in 2026 in what some have dubbed the SaaS apocalypse and others the SaaSacre. Software has seen indiscriminate selling amid fears over AI disruption in the space. The industry has seen some relief in recent days with the iShares expanded tech software sector ETF up.
It's just gonna blow everything up.
52-week low set on February 24th.
These guys are just gonna become super fucking
Take a
efficient.
deeper look at the chart for IGV. We've seen a little bit of
Like a
recovery
ridiculous
recently, but what
amount of
trends are you
stuff.
noticing
Like
on this
movies
chart,
are
Rick?
gonna be.
Yeah, so when we look at
Oh,
our
entertainment
comparison here,
is-
IGV down only about
Are you not
4.3%
entertained?
during the past 52 weeks here.
Is that
but
not
that's
why
after
you're
a notable
here?
recovery and a long decline here. So if one thing that really stands out to me about this chart is if you look over here, this is the correlation between IGV and the SPX, meaning the degree to which they move in tandem. So they were extremely tightly correlated, almost at 1 for much of the earlier part of our past calendar or year here. Now the correlation is more negative here, so they're more likely to be moving
be a nice
in
day.
opposite directions now. So just some food for
Gonna be a
thought.
nice
quick
day.
glance too at the devastation in this
Everything's
space
gonna
over the
stay
past 6
right
months.
where we
Oracle
want to.
at the
Our
bottom of the
options are
heap
gonna be
here, not
perfect.
exactly doing great as well. But
gonna
now when we
stay
move on
cool,
here,
calm, and
we can see
collected
for
as
the
traders.
overall ETF
And as
trending
people,
lower.
and as
Our longer-term
financiers.
trend line that began up here near these old highs is still in play. But for now, the sharper, steeper trend line in purple has been broken. Now you could have this blue upward sloping line as a potential boundary here. We did make some relative highs above this previous peak near 87, but so far it hasn't really translated into lasting gains. The next potential hurdle to the upside could be around 94 based on an old low and a subsequent high after a gap. To the downside, notable lows here near about 79, and then as well matching up with our April tariff news shock event lows there near 77. So now when we look at our moving averages that we follow here, we can see that we have a confluence of our two shorter term moving averages, our dark blue 5-day weekly EMA, our teal 21-day monthly EMA. Those come together around 85 to 86, roughly matching up with our shorter term trend line as well. So that would be a potential breakdown point based on these indicators. We can see that RSI has improve
So,
somewhat
strong
after a
market
period
breath
of
confirming
bullish
a
divergence, kind of complicated by the fact that the RSI was in the oversold territory as well.
Gosh darn
We
it,
have
a
seen a
potential
resurgence.
market
Now we are
reversal will
fighting
be
to
specific.
retake that 50 midline. We closed just a hair below it yesterday. Finally, our volume profile study shows that we have significant volume at low levels here and another node here. So those come in around 82 and 87 roughly.
All right, Rick. So what's the approach you would take for an example trade?
Yeah, so one other thing to point out too, very heavy volume recently. These are all volume spikes, meaning volume at least 50% above the 50-day moving average of volume. So very, very heavy activity at these low levels. Heavy volume at significant lows often can translate into a sign that a significant low point has been formed. When we look at our expected move here, April 17th, 37 days out, our yellow box here, plus or minus about 9.5% roughly here. So if we were to overlay all our studies here on top of everything, we see our expected move boundary lines up with our notable support on the downside and our notable resistance on the upside, having to cross through those volume nodes on both sides. So the thinking for this example trade then would be a more neutral outlook given the kind of iffiness of this sector as a whole and these significant support and resistance levels. So an iron condor, -1 April 17th, 95, 100, 80, 75 iron condor at a 150 credit here. So selling a call spread, selling a put spread at the same time. So that gives you a 37-day to expiration trade here. Max profit would be our credit received, $150, $150. Max loss would be $350 then. So risk to reward roughly 0.4 to 1, something like that here. A decent setup for an example trade that traders might commonly look for. Break even 78.50, 96.50, minus 8.7% and plus 12%. So a bit more of a bias toward the upside here for in terms of the safety of the trade. Expected move, as I said, about 9.5% in either direction here. So this would be a trade kind of looking for, again, this price activity to stay within some of these more extreme boundaries that we've seen over roughly the next month and a little bit, a few days beyond a month.
All right, thank you, Rick. We've got pressure on markets this morning as investors wait for the latest decision on oil reserves. We've seen reports from both Bloomberg and the Wall Street Journal that the IEA is set to release a record amount of oil from strategic reserves. Right now, you've got S&P minis off by 0.25%, NASDAQ 100 futures lower. So too are Dow futures, Russell 2000 futures feeling the brunt of it as oil prices rise once again. Thank you so much for joining us today on Morning Movers. I'm Diane King Hall. Download the Schwab Network app. It's available in the App Store and tune in 24/7 on schwabnetwork.com. Stay with us. You've got Opening Bell with Nicole Petalides up next.
Yeah. See, cool. Yeah. Certificates issued by the U.S. Department of Defense representing shares of foreign companies.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Investment advisors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines,
That's pretty much the
live
same though,
analysis,
so it's gotta be one of those,
breaking news,
right?
and sharp
Like
trade ideas
account
minute
positions,
by minute.
and then
With
security
shows built
names.
for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders,
Holdings
and
reports.
trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7,
Account
any
positions,
screen,
current
anywhere,
market values,
free. Schwab Network.
project. Yeah, I would imagine actually. Damn it. Oh, okay. It had to have been something where you're not supposed to lead them. Yeah, I knew it. Misleading. I knew it. I knew that.
Family be vulnerable.
Holding reports must show actual. Yeah, no projections.
Now we're in the car together almost daily. I started to realize what can I pick up from my dad.
Yeah, all
He's been with
straightforward,
Schwab for
no
a long
fluff.
time.
Jim's my
Back to the
financial
forecast,
consultant.
not-
I
yeah.
probably met 20 years ago.
Jim's
Yeah.
really been there to
Hold on.
answer any questions I ever have.
Projections,
Makes a huge difference
forecasts
when
are
you have
not
someone
required
that actually cares.
Well, yeah, nobody
Stay
wants
connected to what moves markets.
smoke blowing up
Download
their
the Schwab
butt.
Network app and stream live coverage wherever you are.
Which statement? Or is that? Fiscal policy involves government taxation and spending decisions made by Congress and the President. The Federal Reserve controls monetary policy, not fiscal. That's what it was.
Good morning and
Okay.
welcome to Opening Bell right here on Schwab Network.
fiscal
I'm Nicole
is
Petalides.
the
A happy
Congress
Wednesday
and
to you. I'm glad
President.
you're with us. Stocks are
Monetary
looking to the
Federal
downside. For the
Reserve.
week, we are seeing the
Bond,
S&P and NASDAQ
How-
higher.
okay,
The NASDAQ,
money,
in fact, is
where-
up
how
about
much money, and then how
1.25%
it's
for this
spent.
week. But we have a lot to talk about. Of course, the Iran war continues. The G7 nations announced some releases of the strategic reserves. Oil sitting at $87 the barrel. You had also 3 tankers, 3 cargo ships that were struck off Iran's coast, according to the UK. So a lot to sort of take in, a lot of
There's a shit
headlines
ton
here.
of
In the meantime,
stuff going
we're going
wrong.
to have the CEO of U.S. Antimony joining me here on the desk to discuss the company's uplisting here to the New York Stock Exchange and the search for rare earths, a hot topic here on Wall Street. In the meantime, here's a quick check of the markets. As I mentioned, stocks are looking to the downside to the tune of about 0.25% for the S&P 500 right now futures. Dow futures are down right now 176 points. NASDAQ futures 0.1%, and Russell losing about 0.5% on futures. Gold pulls back 51.76 a troy ounce, down $64, and oil 86.75 the barrel, up $3. Of course, you remember it was nearly $120 in the last 72 hours, right? So there you have it. Alex Coffey's with me, co-host of Next Gen Investing. We're going to talk oil. We're going to talk CPI. We've got that CPI inflation print, which did come in line, folks. So oil remains the top story rather than the CPI print at this moment. So let's talk about that and what folks are saying. Good morning to you, Alex Coffey.
Yeah, good morning to you, Nicole. Yeah, as you said, some vessels reported to have been hit by projectiles. 3 carrier ships in what was one of the more explosive days of the conflict, this, going on 2-week-long conflict at this moment.
2 weeks.
All that to be said, oil way off the highs, not only intraday, but of course where it was, Sunday evening, as you sort of saw the
that war is going to be
crescendo of
more
that implied volatility.
the oil war and the
and
market's going to be
volatility in
crazier
this
than the actual
space.
war. Well, that's
you
crazy
mentioned
to say.
the
You know what I
IEA
mean? That wasn't funny. but-
proposing what's being framed as one of the largest, releases of reserves in history. Some reports suggesting upwards of 400 million barrels from the emergency oil reserves being released. Now, this will ultimately be made possible by a decision later on when the leaders of the Group of 7 nations actually meet and approve this if they can. Japan talking about releasing, regardless of what the IEA ultimately does, some of their strategic reserves. So to me, that decision alone gives us a lot of information about how these countries worldwide are viewing this conflict, Nicole. And to me, it suggests that They do believe there's going to be a significant disruption, but that disruption is going to be a relatively short-lived period of time, something that the reserves being released could actually curtail the issue and deal with some of these supply chain bottlenecks.
Understood. So that's part of the issue. As I had that conversation with the shipping CEO at Tsakos Energy, he said their ships are just going to wait by the Strait of Hormuz. He had 6 ships sitting there, and the safety of the crew being most important. So you have, and some of them are redirecting, and that raises shipping rates. And if the oil doesn't get produced or doesn't get moved, I know we have the talk of Japan, G7, IEA releasing oil. But, you know, you could see fluctuations. I think people are prepared for that. In the meantime, let's talk about inflation. We'll get the PCE print later in the week, but today's CPI print, thoughts?
Yeah, I think that the headline would have really stole the show had there not been this conflict going on in the Middle East that has stolen the show. 2.5% year-over-year core rate. What does that mean, Nicole? That means that we have the smallest jump in core inflation prices year over year since the cost of living surge began back in March of 2021, where that increase was just 1.6%. So 2.5%, you're still slowly seeing things normalize. Now, where things complicate, I know I'm still talking core, but where things complicate, of course, is that you did have that rapid price surge in crude oil that will probably muddy the waters a little bit going forward for the next few months at least. All that to be said, other areas of this particular report that stood out, Nicole, when you look at it, for me, super core easing, and that, of course, strips out housing costs as well from the core services. It's a pretty modest level, but it's slower again from the January pace. All of these would have been really, really positive headlines. And initially they were seen as such, as you saw NASDAQ futures up like 80 points. You saw a little bit of a rally in S&P futures. But again, the dominance of the geopolitical tension and uncertainty surrounding the bottlenecks with crude oil and LNG continue to dominate the tape.
All right. What about mortgage applications? I mean, we saw a slight rise in housing yesterday. We're going to be getting more this week. How are we doing with the mortgage apps? What story did they tell?
Yeah, they did moderate week over week a little bit for the week of March 6th.
I was overthinking that one.
I was makes sense. You did see interest rates move off of their lows because of this conflict, driving some concerns around prices going forward. They had been 11% week over week when you did start to see that 10-year dip. And now 3.2%. So still climbing. We'll see if that can continue into this week. 30-year rate, though, 6.19%. So did uptick just a little bit on that figure.
SARs on
All right,
Epstein.
Alex Coffey, great to see you. Thank you so much for all that information. Appreciate it. Oil sitting at 85.71. It's up 2.7%, folks. We'll continue to watch that. Also, Jenny Horn, host of Next Gen Investing, also joining us here, looking at the big move that we saw for Oracle, and it was some good news.
Rabbit hole.
It was some good news, Nicole, and I would definitely say some welcome good news for Oracle, as we're seeing a pretty decent, at least pre-market activity today, as cloud growth did accelerate pretty substantially, with total cloud revenue rising 44% for Oracle year over year to $8.9 billion, and cloud infrastructure now up 84% year over year, driven by various AI workloads as well as these large enterprise contracts. And so remaining performance obligations, which is a hugely important metric to a lot of these broader software and tech companies, we did see those surge to $553 billion, up more than 300% year over year, giving Oracle an unusually strong long-term revenue visibility that's tied again to these AI infrastructure deals. Now, earnings and revenue did beat expectations, I mean, pretty handily. Well, we did see that right now revenue of $17.2 billion marks the first quarter in over 15 years, with 20% plus organic revenue and earnings growth. I mean, that in itself is just really wild, and I think also shows the massive swing and the massive really spend we've seen tied to everything with generative AI. Now, management did say that they're raising now their fiscal 2027 revenue outlook to about $90 billion at the midpoint. That signals continued confidence that the cloud demand will persist beyond this year. And multi-cloud database revenue also exploded more than 500%, which also shows that they are continuing to benefit from these partnerships with these other major hyperscalers. So as far as the more balanced, more bearish lean, I know that we're seeing a really nice reaction again in the pre-market today, but capital spending is surging. I mean, no surprise, we have not seen any company immune from that same risk. We also know that core software growth outside of cloud does remain relatively modest, with total software revenue only up in the low single digits and showing the business is incredibly dependent on this infrastructure momentum. I mean, I will say it's still growing, so you can't even make the argument that we're seeing like a segment that is underperforming. It's just not growing to the extent that we're seeing with cloud. Debt levels are also rising.
The least
I mean, this
risk
has
on
been a
them,
huge
the more
pain
they
point
pay
of
you. So
many of the sell-side analysts that cover Oracle. So despite a strong earnings beat, and the reaction again has been volatile, I do think that there is balance sheet risk here to be mindful of, at least more for the mid to long term, but a clear win as far as share price, at least as it stands right now, Nicole.
Yeah,
I think
up
it might be
9.9% right now. So as you said, a welcomed pop this morning.
There we go.
NVIDIA, a $2 billion investment in Nebius. Let's hear a little bit about that.
Yeah, I think really this is a big win for Nebius. I think signaling that Nebius's AI cloud strategy and engineering capabilities are obviously worthy of the most valuable company in the market. It's $2 billion, which is no small amount, obviously. NVIDIA and Nebius, though, are planning to build this next generation hyperscale cloud infrastructure that will be, of course, focused on AI workloads, but the goal is to support massive demand from AI native companies and large enterprises as AI compute needs are continuing to grow. Nebius will be expanding its AI cloud globally, including gigawatts that continue to scale in these AI data centers in the U.S. But the partnership is really aiming to help Nebius deploy more than 5 gigawatts of AI capacity by 2030. NVIDIA will also be supporting the early use of its newest AI hardware platforms, including these next generation CPUs, GPUs, and various networking systems. And so where NVIDIA benefits is by extending its software and hardware deeper into an AI-focused cloud platform. I mean, the companies will work together to continue to grow their inference and grow their infrastructure deployment and fleet management. And so Nebius actually positions itself as more of this purpose-built AI cloud rather than this like retrofitted general cloud provider. And so I do think this is an interesting partnership, but I mean, just the latest wave of NVIDIA spending and the latest wave of, I'd say, further acknowledgement that this space and some of the deal-making and capital-intensive nature, it's not slowing down anytime soon, despite the fact that we've pulled back, obviously, in the broader semiconductor trade.
All right. Jenny Horn, great to see you. We'll catch you and Alex later on Next Gen Investing. Thank you. All right, we're getting you ready for the trading day. And Fritz Falls is with us from 3 Edge Asset Management, taking a look at the volatile week we've had and how to protect your portfolio, too. Opening bell. We'll be right back.
Oh, man, that was a rough one. To fight inflation, the Fed implements contractionary policy by selling securities. This removes money from circulation, raising interest rates, and slowing economic activity. Okay, fight inflation. You tighten money supply, sell bonds, raise rates, increase reserves. Sell bonds, raise rates, increase reserves. Fight inflation. You sell bonds, raise rates, and increase reserves. Tighten money supply. Yeah, too much money out there. And bonds are dead. You sell dead. Get money out of the pool. Cool, we fuck with Schwab. We're Schwab over here, I don't care. Schwab, if you see this, we ride. And I'm gonna pass the Series 65.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
Like
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Non-accredited. If they're accredited,
This is Opening Bell, and we're glad you're with us. We do have some down arrows looking at the U.S. stock index futures today. This as oil's a little bit higher,
Regulation
sitting at
allows unlimited
$86 the barrel right now. Fritz Volz is with us, Chief Investment Strategist, 3Edge Asset Management. Glad you're with us. We all know that we were right around the just below $120 earlier in the week. How is the oil market moving, in your opinion, in the next few days, or how is it driving this market overall?
Yeah, I mean, well, first of all, thanks for having me back. But I mean, to me now, the way we look at the equity markets, for example, or any market, it's really all about oil. It's all about the price of oil. And there's, you know, we started the year at $60 a barrel, gone up to 120, as you said, now back in the 80s. But this price of oil is going to be all over the place. And I think what we're seeing where governments are intending to release their oil reserves is proof to investors that they consider this potentially a very serious problem. So we need to pay attention to the price of oil, and I think that and the headlines are going to drive markets from here for a while.
You said the unpredictability is the problem, really, right?
Yeah, I mean, it's, you know, like, yes, that's absolutely right. I mean, President Trump is predictably unpredictable, so there's a layer of unpredictability for you. You know, how disruptive Iran can be to the flow of oil through the Strait of Hormuz, how much damage can they inflict on oil and gas infrastructure in the Middle East. All of these things, you know, minute by minute are going to change, and that is going to drive the price of oil up and down. And if I were an oil trader, you know, it can drive you crazy.
Look, I mean, if there's predictability or not predictability, the one thing maybe you could count on is that the administration would like to bring oil down before the midterm elections. So whatever occurs here may be short-lived.
Well, I guess that's what
that
they mean.
Being said, do you see opportunity in the market? We've seen a lot of sell-offs that have been happening. Where's the opportunity?
Right. So we, you know, as your viewers may know, at 3Edge Asset Management, we're global multi-asset investors. We are investing at the index level, so we're not buying individual stocks or bonds. And we had been overweight international equities really for the last 18 months. And that worked for us very, very well. However, as soon as this attack broke out, we decided it was a good time to lighten up on international equities because those countries outside the U.S., like Europe, Asia, and the emerging markets, those are the folks who are going to suffer the most if we get a rise in the price of oil and a sustained rise in the price of oil. So from an opportunity standpoint, to me and to us, this is an opportunity to be a little bit more defensive, maybe take some gains in those equities, and then try to get as diversified as you can, including owning gold, owning commodities, things that can protect you, whatever come what may in the market.
I'll get to gold in a minute because I do want to get your outlook on that. So sort of pulling back on your equity position, is that, I'm sorry, was that only here in the U.S. or just globally overall? And also I think about, yeah, go ahead.
No, you finish.
I was thinking that, you know, I've had a guest yesterday who thought that with tech pulling back that you could get into things like the triple Qs or the NASDAQ, because I know you're following a lot of the indices, you know, which of the indices will be attractive to you if they're not today?
Right. So when we did our pullback at the outbreak of the attack, we did that in the international markets only. We still have some exposure to the U.S. market, but where we took the defensive move because of the oil situation, we pulled back on international. Now, you know, as you mentioned, this thing could end fairly soon. President Trump could declare victory, cease hostilities. We could get oil flowing again. And at that point, it could be a good time to get back into the equity markets. But I'm thinking that if we do that, chances are we would look more towards the value style in equities, small cap value or large cap value, and even value U.S. and value international. We just think those more defensive sectors would be the place that we would re-enter the market when that made sense to us.
Yeah, so what would be some of those indices that would represent value that you would recommend at this time?
So yeah, what's the three?
As you know, from a compliance standpoint, I can't talk about individual tickers, but there are a variety of ETFs which represent small cap value indices in the U.S. and small cap value or large cap value ex-U.S. in the international markets. So investors can certainly go and look and on Schwab and other platforms, and there are a variety of these index ETFs in those sectors that could make sense.
Let's talk about gold, too. 51.84 troy ounce today. Where do you think gold could be headed?
Another good question. So it's interesting what we saw in response to the attack, because, as you know, the dollar has been declining for a very long time. But when this attack took place, the dollar actually rose. But it wasn't that the dollar was rising versus gold as a safe. So people weren't choosing between the dollar and gold as a safe haven per se. What they were saying is, we think the US dollar is a safer bet than the currencies outside the US. So that was taking place. And meanwhile, gold has sort of traded within a range. Long term, we very much like gold. However, if we see the dollar continue to climb, then that is going to put pressure on gold. But I would certainly like to have some in my portfolio because it is a good shock absorber for exactly what is happening now, for exactly those geopolitical conflicts. It's a safe haven asset. That safe haven capacity will still function well for investors.
And when I think about the international footprint that you like to have, is there areas that you like more than others, for example?
Well, I think opportunistically, what might happen here is an area that could stand to benefit will be Latin America. And really, people haven't been focused on that region, but I think that is a good time for investors to turn their attention and start to do some research into the opportunities in Latin America, because I think they could benefit coming out of this situation.
And so last but not least, with the volatility in oil, your final thoughts on, could we see $120 again, Fritz?
I think so. You could even see it go higher. I mean, it all is going to depend on how long this conflict lasts, how intense it gets, because, I mean, we have seen Iran has been pounded by the U.S. and by Israel, but they're still capable of, launching attacks into ships in the Gulf, into ships in the Strait of Hormuz. And so, it's just impossible to try to predict where the price of oil goes. So I think at least you have to be willing to say that if you start a war, it's hard to control the outcome. And so I need to be at least prepared for the price of oil going higher, staying higher, and goosing the price of inflation. We got those inflation prints today, but it doesn't really matter because that was before the attack on Iran. So I think you need to at least be prepared for oil going higher and even remaining higher depending on how this conflict plays out.
Speaking of gold, somebody's got to get that dude
Chief Investment Strategist, 3 Edge. Really appreciate it. Great conversation. All right, folks, coming up, a quick break. We'll get you ready for the countdown to the start of trading. We'll also have the CEO of U.S. Antimony and Rare Earths will be joining us in the back half of the show, and all the movers that you need to watch. We'll be right back.
Where are the movers? Where are the movers? Moves like us. Nobody moves raising finances with reason. We don't. It makes no sense. That's just simple logic. It sucks.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more.
We do this all the
Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest.
I'm not nervous.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm the guy with the show. Trying to keep it together. Yes.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network, live at schwabnetwork.com.
Backwardation over the weekend would be cute.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning.
Prepare for
Trade brilliantly with Schwab.
And I feel good about today, so we're about to start taking queens.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks?
We'll be right back.
Our technical analysis webcast.
we go. And we're back, and we're back. The bells, and they go crazy.
And there they are. You see the CEO of U.S. Antimony there ringing the bell, and we will have Gary Evans later in the show here. So looking forward to that conversation about rare earths. The company has been uplisted here to the New York Stock Exchange. Stocks start mixed. The S&P 500 at 67.93, up 12 points, up 0.2%. Tech-heavy NASDAQ up 1/3% at 25,046. The Dow is losing some ground, down 77 points, and the small caps down almost 0.5%. This as oil is higher by about $2 here, 85.55 the barrel. Iran threatening and warning of $200 the barrel and threatening continuing strikes. In the meantime, so we're seeing volatility with that. Right now, the VIX, though, is pulled back. It's at 24.77, and the 10-year bond yield at 4.18. There you have it. That is the big picture. And we continue to start and take a look at some of the movers. Hey, a quick check on Bitcoin at 70,455. That is up 260. And we are joined by Diane King Hall, taking a look at some of the movers. And Campbell's struggle has been real. And once again, we heard some of the same.
Indeed, weaker than expected on both the top and bottom line, and shares are reflecting that this morning. Investors selling that stock off today off the back of the double miss for its latest quarter, and the outlook doesn't look great here for Campbell's. Shares down about 2% right now. They missed on earnings, that coming in at 51 cents per share. The street was looking for 57 cents on that metric. For revenue, it comes in at $2.564 billion. That was weaker than expected. The street was looking for $2.61 billion. Where was the weakness? In the snacks division, including chips and pretzels, so that weighed on results. Campbell's also flagged storm-related disruptions. They said that impacted shipments, caused some higher costs. Those were headwinds for Campbell's. They've lowered their full-year profit forecast to between $2.15 to $2.25 a share. So that's obviously concerning. In terms of the snack sales, those fell 6%. So that way, Campbell's also saw some weakness in meals and beverage, that segment, where sales declined 4%, including some softer U.S. demand for soup, which we know has for years been its bread and butter. They've obviously tried to expand beyond that when you think about snacks, the Rouse brand as well. Profit did take a hit. Overall, they've mentioned operational disruptions as well as a headwind. The other thing that Campbell's is still dealing with is we haven't been having this major conversation about it, but tariffs, when you think about metals and the impact there. So that's still a headwind for them because they're dealing with some pricing pressure as a result, and that it's caused them to have to raise some prices to try to offset some of that.
You know, I think it's a monumental day because we don't often say a stock is at a 2-decade low, particularly for a staple that you think everybody needs soup, right?
Yes.
But when you look at this stock or you've been a shareholder and see this at a 2-decade low, that is
You're not happy.
Let's talk about the upgrade, though, that we're seeing for Nike.
Nike getting some love from the street, from the sell side this morning. This is from Barclays. Barclays is upgrading Nike to overweight. It says the worst of its struggles may be behind it. This is another one that had been struggling for some time. We've been waiting for the turnaround story to happen with Nike. So the view from Barclays is the turnaround story is in action here. So the shares are responding positively to this. Shares up about 1.75% this morning. It has been under pressure year to date. So some investors aren't sold yet on the turnaround story here. But Barclays is raising its price target, is raising it to 73. That's up from 64. It implies about 30% upside from here. Again, the shares have been under pressure so far this year and on a year-over-year basis. But Barclays says the operational improvements are starting to show up. They think there's been better inventory management. We've heard that from other analysts as well. There's signs of increasing demand in North America. So maybe Nike is getting its mojo back. Including, they mentioned the double-digit growth in the running category. That would be a key win for Nike, especially when you compare it to the competitive landscape of, say, Hoka, Decker's brand there, and On. But again, the view is that there is some more focus on brand health and stabilization of margins and they think things are going to be better for Nike this year, Nicole.
All right. Last but not least, we often talk about Walmart and Target and how they're doing and the new CEOs. Target, one part of the plan here is cutting prices.
It is. So they're going to be lowering prices on more than 3,000 items in this spring. It's going to range across categories. We're talking about clothing, home goods, and they say daily items as well. The shares right now, little change this morning, but they've been a big outperformer this year as some investors start to believe that Target is making a comeback and that this will be a year of a comeback for them. Now, to be fair, it will be easier comps on a year-over-year basis. The view is that they're trying to take advantage of the spring shopping season. We've been having this conversation about choosy consumer. I talked to Dana Telsey of Telsey Advisory Group this morning. She said she expects that to still be a theme this year. And she's not surprised to see the price cuts when it comes to Target. It's got to compete with Walmart and try to reclaim some of its customers back from Walmart, Nicole.
All right. And just to check on Oracle, I know you were following that story this morning, up 13.5%. Uber, CF Industries, Valero, also some of the other winners. Diane King-Hall, thank you for coverage of those names. And folks, coming right back, we'll look at the key levels to watch on the charts right now. Kevin Green is with us. Opening bell. We'll be right back.
While others recap the news, I help you read between the lines from what's moving markets to what's next with sharp takes and market know-how. Follow me on all social media platforms at Diane King-Hall and connect with me on LinkedIn for more.
Do you want to know where to invest $1,000 right now? Goldman Sachs says this new AI breakthrough could trigger an unprecedented market opportunity. NVIDIA CEO Jensen Huang says, what this team has achieved is singular. It's never been done before. And White House AI and crypto czar David Sachs says, they're scaling this technology faster than anyone. But if you want to claim a stake in this AI game changer, you have to act fast. One industry insider predicts this breakthrough will come out within the first 3 months of 2026. Blink, and you'll miss the boat entirely. So do you want to know how to get started with this technology? Stick around for the next 60 seconds and I'll show you how. Hi, my name is Louis Navalier. I'm a money manager and I've been investing since 1982. I've been featured in virtually every single major financial publication and TV show. The New York Times even called me an icon among growth investors. How do I accomplish all of this? I'll tell you this. I didn't come from money. My father was a stonemason, and I was the first person in my family to attend college. The secret to my success is that I have a knack for finding opportunities in disruptive technologies. I bought Amazon in 2004. I bought NVIDIA in 2005. And I bought Netflix in 2009, just to name a few. Investments like that helped me grow my fund from $300,000 to $1 billion and go 14 years without a losing year. But I don't just help the rich get richer. I also show everyday people how they can build generational wealth by investing in disruptive technologies. That is exactly what I want to tell you about today. The technology that just landed on my radar might be the most disruptive and lucrative one I have ever seen. One Nobel Prize-winning scientist believes the seismic shift could have an even greater impact on society than the internet or mobile technology. And I want to give you, free of charge, the name and ticker symbol of the company at the center of this disruption. You don't have to give me your email address, your credit card, or anything like that. And no, it's not Tesla or SpaceX. Just click the button on your screen to access this free pick. It's a pure play on one of the most exciting stories in stock market history. An AI breakthrough in which Elon Musk, Jeff
And technically speaking, if you're looking at the weekly chart, RSI is starting to flip over here a tad bit, but the weekly chart still looks a little bit more bearish, and we could go back to that 120 level over the next couple of weeks.
Kevin Green, thank you for that. Appreciate it. A good look there at those charts, the levels to watch. Thank you, Kevin. Now it's time for our market meetup panel. Alex Coffey and George Silas are with me right now. Gentlemen, nice to see you. George, your thoughts on this market action?
Well, I mean, if you just look at what's been going on, interesting enough, I know the markets really haven't done much in the past, several months, but, anytime there's a dip below some support areas, there's buyers that step in. So I do notice that, from an accumulation or institutional accumulation standpoint, that seems to be still going on. It doesn't necessarily mean we're out of the woods yet. I think, looking at yesterday's high, or at least a reclaim of that point, at least in the S&P, is something we need to see. It looks like the old sort of play last year or even earlier this year, which is the tech hardware names are still being bid up. If you look across the board, there's some deals with NBIS or Nibius Group with NVIDIA. You look across too, Oracle's higher. The usual suspects in the memory stack too, as well as CPUs like AMD and Micron. Then also today, what you'll notice is staples are not performing well. Discretionary is. So it seems to be at the very least right now a bit risk on. I think the CPI numbers too, as they mostly came in line, are reflecting that in the market where there's a bid for risk taking. But there is still the issue with what Kevin brought up. Volatility is still elevated. That's still a concern. Crude oil looks like it's balanced between $75 and maybe $90 a barrel in equilibrium. It's still elevated, but again, nonetheless, the super spike might be over unless there's another, exogenous factor that causes a resurgence. So again, I think if you look at 10-year yields, they are inching higher, and that's to be expected considering the inflationary impact that that heating oil and of course gasoline will have on the economy, just because of the trickle-down effect from crude oil.
I also think we didn't really touch on Tesla, and Tesla's up 2.5% today, and actually the sales rise in China for the EVs rise for the fourth consecutive month in February. The Model 3, the Model Y, manufactured at the Shanghai factory, including exports to Europe, reached 58,000 plus units in February. That was up 91% from a year ago. Tesla also teaming up with Google, and this is to lower electricity prices. So good to keep an eye on Tesla at 409 today, up 2.5%. And Alex, you're looking at some tech names and discretionary with up arrows.
Yeah, and you mentioned Tesla. You throw Amazon in there. That's a recipe for discretionary outperformance, as it's the leading sector on what's a relatively narrow rally today so far, guys. Only about a third of the S&P 500 components are higher. and it's led to a roughly unchanged marketplace. But software strength on the heels of Oracle's earnings has certainly bolstered the tech space as well, as you see about a 0.6% rally in IT. Only other sectors that are higher on the session, communication services, which of course contains Alphabet as well as Meta, is just above the unchanged line. And then energy with the bounce back in oil relatively moderately today. But discretionary and tech doing a lot of heavy lifting so far, Nicole.
Yeah, understood. George, what did you think of the CPI? Pretty much in line. I mean, I know we had the different, we always look at the different metrics, what people are spending on.
Yeah, I mean, I think still, look, we're still elevated. There's maybe not much room unless there's some sort of a fallout in the economy of the markets that the Fed has to move rates to the downside. Just look at the numbers, still above Fed's target. So overall, a good print from the standpoint of meeting expectations across the board. But again, you got to look at what's happening from a forward standpoint, considering the manifestation of higher energy prices will eventually trickle down to, products. And because crude oil is really the linchpin for inflation. When it rises, there's, of course, a trickle down effect, and that includes services eventually. So that's something you have to be concerned about. But like I said earlier, irrespective of that, there seems to be bidders that buy every time the market hits some support areas on an intraday basis. I can't say if that'll continue from here, but there's still some caution out there, but there's also some optimism when it comes down to the price action, of course, the accumulation that I see underlying the market.
All right, George Sillis, Alex Coffey, thank you both so much. I see Oracle up 14%. And by the way, Cantor now has a $229 price target and an overweight rating, even higher than some of the others we mentioned today. All right, coming up in just a moment, we have the CEO
a little bit over an hour and 15,
Antimony
so
getting
thanks for coming
big
out.
Contract from the government. This
Sitting
is
with
all
finance
about
with
rare
Reezuhn.
earths transferring from the American exchange here on the New
Obviously,
York
just because
Stock
we're
Exchange.
cutting out
So
doesn't mean you have
we'll
to
be
stay
right back.
stay watching always. Okay, we'll catch you tomorrow morning. All right, peace. And look out for Move with Reezuhn coming up soon. Today we're going to be taking
Sometimes
points, like I said.